Welcome back. If the last session told you all about what the future looks like when it comes to technology, then our next session should give you an idea of the role startups who use the technology to boost their business. Our speakers are mobile payment company Mobikwik's co-founder Upasana Taku and Sequoia Capital's Rajan Anandan, who also used to be the head of Google in India. Digital payments have seen a revolution since 2016 when demonetization provided the push that they needed. So where will the next revolution come from? What kind of startups can we expect? It's over to Shruti Mishra.
Thank you so much, Sunetra, and good evening, everyone, and welcome to the 19th Hindustan Times Leadership Summit. I'm Shruti Mishra. Now, this session is very close to my heart. After 13 years of covering India's startup ecosystem, I can say with conviction that 2021 is turning out to be quite a dream run for the Indian startup ecosystem. Against a cumulative number of 33 unicorns from 2011 to 2020, 2021 has already seen the emergence of 41 unicorns or billion-dollar value companies, and we still have a full month to go for the year to end. 2021 has also turned into a year where a record number of startups hit the public markets, from Zomato to Paytm, Nykaa, Policy Bazaar, and they just keep coming. To talk about the journey from startup to IPO, the debate between price and valuation, profit or growth for investors and founders and entrepreneurs, joining me now are Upasana Taku, co-founder and director of Mobikwik, and Rajan Anandan, managing director of Sequoia Capital. Upasana and Rajan, welcome to this session. Rajan, let me first start with you. It has been the year of IPOs for startups in India, and every new listing has been a leader in their space, with Zomato, Nykaa, Policy Bazaar, Paytm, and now in the pipeline are Delivery, PharmEasy, Ola, Oyo, Mobikwik. Rajan, do you feel that how ready are Indian tech companies of going public now more than ever before?
Yeah, I think first of all, thanks for having us. It's great to be here. Look, I think the Indian startup ecosystem has been over a decade in the making, right? So and in many ways, the time has come, for us to actually start seeing at least some set of exits, right? I mean, obviously, we've probably, the number of IPOs in India, tech IPOs in India, have surprised all of us. But the reality is, look, this has been a long time in the making. If you go back to 2011, which was exactly 10 years ago, we had 0 unicorns, right? Yes. 2015, we only had 4 unicorns. And then this year, I don't know what the latest number is, because there seems to be a new unicorn minted every couple of days. I think we have over 40 unicorns just in this year. So I think it's been a long time in the making. And in terms of, are companies really ready to go public? I think the real test of that is going to be in a few years, right? Okay. Obviously, we are seeing a large number of very successful IPOs, and that's the first sign, right, where the public markets are actually saying that these are companies that should be valued at the way that they're valued. And as you said, many of the companies that are going public today are market leaders. But the real test, I mean, it's going public is really, Shruti, a marker, right? It's just one of the milestones in the journey to building an enduring company, right? So if you think about idea to IPO and beyond, the beyond part is pretty important, right? Because to be a truly enduring company, whether it's a Google or a Facebook or an Amazon, or if you look at India, or TCS or an HDFC Bank or the many other enduring companies that you have, the real question is going to be what's going to happen 1, 2, 3, 4, 5 years from now. Yeah. So if you ask me which of these companies, were they ready or not? I think we can look back in 2025 and the answer will be pretty clear, right? The companies that continue to be very successful, continue to build, continue to grow, and continue to be market leaders, I think those were the ones that were ready, and maybe the others that went public weren't ready, right? So it's like everything else in time, everything else in life, time tells you the answers, and this is one where I think 4 or 5 years from now we will know.
All right, Rajan. So we'll have to wait and watch. But, which IPOs of 2021 have really excited you the most? We've got, from food delivery Zomato to new age commerce logistics. We've got B2C to Policy Bazaar that brought, order to a highly segmented market. Which IPO excited you the most?
Look, I think I'm excited by all technology companies. Upasana is here from Mobikwik. Super excited about Mobikwik. I think. Look, I think all of them had been very, very interesting, right? So just in Sequoia Capital, India, Shruti, we've had 8 IPOs this year, right? So that started the year with Indigo, which is a very, very interesting company. Most recently it was Go Colors last week, and then in between we've had companies like Freshworks that went public on Nasdaq, Truecaller that went public in Europe, Appia that went public in Japan, and Zomato that went public here, right? So we've had just within Sequoia Capital India, Shruti, we've had 8 IPOs this year already, and then we have many more in the pipeline. But to ask me, which one is the favorite one, that's sort of like saying, hey, look, which of your children is your most favorite one, right? You just can't. You like them all. You love them all. And I would say, I think I'm a big fan of all our founders who are building extraordinary companies.
All right. Clearly, Sequoia has had a wonderful year. Upasana, let me now quickly come to you. And we were talking about IPOs. You've spoken about an IPO for a while now. How has the experience been? What has been the challenges?
Well, firstly, thanks for having me here today. Great to be on this session in August company. And I must thank Rajan because Sequoia Capital has been our first partner from IPO, from idea to growth to IPO and beyond. So we do really believe that this year and the year coming forward is going to create a new story for tech startups in India, and hopefully a very positive story for many more to follow. So the journey has been quite interesting. I think there is a lot of process involved, but my key learning from the IPO preparation has been that the lens that private investors versus public market investors have a slightly different lens. Okay. Investors in the capital markets are looking for companies where the business model is very clear. The financial performance has been demonstrated year over year for at least 2-3 good years. And there is a clear path to profitability. And I think having been following a sustainable growth strategy already for the last 4-5 years, I think it was my pleasure to bring that story to the market, to the investors. I think one thing though is common between private markets and public markets. It is still a very, very male-centric ecosystem. And yes. I can tell you that a leader, a founder from a tech company, I think it is going to become easier as we go forward. So I do hope that there will be more women-led companies that come to the capital markets.
Absolutely. I was about to come to your journey, but one very quick question about the IPO. If you can give us a sense of what the market can now expect, will you be relooking valuation and pricing?
Well, I think that many companies are going to come to the markets in 22. I think that markets are markets, so we have to respect the markets. But I do believe that there will be, a flurry of startups coming to the market. And I think the investors will provide the right valuation to the right companies. I think there are all kinds of different companies coming to the market. And I think, like they say, beauty lies in the eyes of the beholder. So valuation and the success on the capital markets will also be in the hands of, investors for every single company.
All right. I just mentioned, you're one of the few women-led startups going for an IPO. You're a trailblazer. How has the journey been for you? And, Upasana, why are there not enough women-led startup founders?
Ooh, that's a big question. So I think firstly, just for any startup founder, I think that it's a very exhilarating journey, thinking of doing a startup, coming up with the idea, getting the team, and it's a completely different experience. For me, it has been one of the most exhilarating life experiences. I think the only other experience I can say is comparable is many years ago, I was riding up to Changla Pass in Ladakh on the way to Pangong. And there was a downpour of rain and a bunch of like a dozen or more bikers were coming down and saying, don't go forward. I mean, that is sort of the that is what it is. The startup journey is like dozens of people telling you to turn back. But despite all of that, you keep going forward. So building Mobikwik has been like that for me. Against all odds, Bipin and I decided that doing a digital wallet in 2009. In 2009, imagine the whole world would have thought we are crazy because India was a completely cash-driven economy at that time. But see, lo and behold, today India has 250, 300 million digitally paying users. And if I could say, 100 million or more are on our platform. And companies are raising $100, $200 million every year. And we have raised $100 million and spent that in a decade. So I think that there are opportunities for founders, to set their vision and build their company to their liking.
Yeah.
And coming to the woman angle, I think it's not been easy. I think I have been construed as being the EA, the HR manager, the receptionist, the salesperson, everything else. Except the founder of a tech company. And I think after you reach a certain scale, that possibly changes. But I think overcoming all of that requires sort of a lot of grit and perseverance. And I think you break quite a few ceilings doing that. And I hope that is going to inspire many more, women to follow the path. If I could just take one more sec here. I do believe that there are quite a few new initiatives coming that are helping women founders to come forward. And I truly believe they need all the help, because if in order to be successful as a founder, as a male, if I have to work, let's say 1.5x or 2x, as a woman, I have to work 4x harder. I have things to do at home and I have things to do to work very hard, even in the workforce. And I think it's not easy. So many women actually tend to give up. And I think I don't want women to give up. So I want more surge initiatives, Rajan, and I want many more venture capital firms to do spark women initiatives so that we see many more women in the ecosystem. This has been a positive year. We spoke about 40 unicorns, 4 women-led unicorns this year in India. So yay, we are making progress.
Absolutely. And Rajan is all smiling and he completely agrees to that. But this is and Upasana, clearly you've shown a lot of grit, a lot of perseverance. Mobikwik is a success story. But, let me quickly move on to the other topic, which is very close to Rajan. We were talking IPOs and there is so much buzz on the domestic exchanges. Will international listing be key for the Indian startup ecosystem, Rajan? And how critical is it for Indian companies to list on international exchanges, especially for SaaS businesses who have a global consumer?
Yeah, I think Indian startups being able to list directly on international exchanges is very, very critical. This was approved by cabinet, I think, last year. So we are hoping that in the next budget, Shruti, that this goes through. Follow through and executing and landing policies that are announced by the government is very important. So we are all very hopeful that this will happen in the next budget. So I think, at the end of the day, Shruti, it's really about giving Indian entrepreneurs, right, to list where they think is most appropriate. Now, the reality is most Indian entrepreneurs will actually list on the Indian exchanges, right? If you're an Indian brand, this is your business, you're your consumer base, or if you're a B2C or a B2B business, and your market is here, and all your teams are here, your talent is here, your customers are here. It may absolutely make sense to list on the Indian exchanges, right? So you look at a company like a Zomato or a Policy Bazaar. I mean, these companies do have some presence outside of India, but they're largely Indian companies, meaning they're India-focused companies, right? So our view is that a very large number of companies will end up listing in India. However, there is a subset of companies, right, that are going to be global from day zero, and a large part of their end markets are going to be outside of India, right? So let's say if 70-80% of your revenue is coming from the US, then we do think for a company like that, and you happen to be a SaaS company where the SaaS investing ecosystem is very, very deep, right? The public market SaaS ecosystem in the US, for instance, is very, very deep. It may make more sense for you to list on NASDAQ, right? So we saw what happened with Freshworks. Freshworks is an example of a company like that, right, where $400 million plus of revenue, almost all of it comes outside of India. The US is by far their most important market, and listing on that exchange actually makes sure the company is fairly valued, but also gives the company tremendous brand leverage. Right. And so that's sort of how we think about it, is at the end of the day, it's about giving our entrepreneurs the option to list where they think is most appropriate. Right. And we should let the entrepreneurs decide. And I think what we'll find, much like in every other market that has actually allowed international direct listings, is that most of them will actually end up listing, or most of our entrepreneurs will end up listing in the domestic exchanges. So super critical, and we are hoping that the government will follow through and actually take this change to its natural conclusion.
Well, fingers crossed, and we'll wait for the 2022 to really see that happen. Rajan, we spoke about the growth of unicorns. We spoke about how the year has already seen over 40 unicorns. Saw a record amount of funding this year. Crazy valuations are chasing startups. Despite no signs of profitability, are valuations overheated in early stages with so much capital chasing pre-revenue startups? Is this a bubble? And if not, what is the underlying asset you see?
Yeah, I think it's a great question. So firstly, I think it's important, Shruti, to keep in mind that we have cycles, okay? We are now at the very top end of the cycle, right? Every time we sort of say we are at the peak of the cycle, we go even higher. So, I don't say peak of the cycle anymore because, but look, we are definitely at the high part of the cycle, right? And cycles turn, right? So when the cycle turns, then we're going to go through a period where it's not going to be like this at all. So it happens in public markets, it happens in private markets, and so so basically it's not just in private markets, right? You look at the public markets, there will be a correction where we'll have the next part of the cycle, and that part of the cycle, valuations will adjust. Fundraising will become very difficult, and in many ways, when I said like we will know 4 or 5 years from now, right, which of these IPOs were terrific IPOs. That's the reason I say that, because when markets turn and when things turn, and as Upasana said, public market investors have very different expectations of how companies should perform. That's when we'll know. So it's a long way of saying, look, it is what it is today, but what I can tell you is it's not going to be this way for very long. Now, what I don't know is how long is very long. Is it 2 months? Is it 6 months? Is it 12 months? I don't know. But there will be a different part of the cycle. And in that part of the cycle, it'll look very, very different, right? So I think what founders should do is, if they're able to raise capital and they think they need the capital, they should raise it. But they should be very, very prudent about how they spend it, right? I think Upasana talked about the journey of Mobikwik. I mean, it's extraordinary that they built this company on $100 million, because as she says, lots of companies are raising hundreds of millions of dollars today. That's okay, because you can raise the capital, but what's not okay is to spend it all. Because when the market turns, many of them will not be able to raise the hundreds of millions of dollars. So it is a very exuberant market today. Now, part of that is justified, Shruti, because our ecosystem is literally, orders of magnitude deeper than it used to be, right? We have 600 million internet users, 500 million daily connected users. A company like Byju's is 10,000 crores of revenue, which shows the depth of the edtech market and so on and so forth, right? Our payments is, fully mainstreamed. Upasana talked about this 300 million, Indians that are paying with their, e-commerce has been mainstreamed and so on and so forth. So the markets are much, much deeper. So in that context, right, companies should be much more valuable. But in terms of, where we are, it really is a function of where we are in the cycle.
Sure. So, interesting. And picking up from what Rajan said, Upasana, the question is for you. Do you believe Indian startups are now focusing on unit economics and profitability more than ever before? We've seen how the pandemic has forced businesses to relook at their books and cut the fat.
So, hey, Shruti, I think last year when we were in the heat of COVID, I think many companies did take capital efficiency very seriously, perhaps, in the first time in the last 5 years. And like Rajan said, I think last time I saw this cycle was in the 2015 time frame where, companies focused on cost efficiency. But overall, I don't really think so. I think that money is very easily accessible right now in the markets. And so many companies are focused on growth metrics, as they should be. But I do think that the smart ones, and there are fewer, who have this, growth strategy where you are investing money in growing your platform, but you know how you're going to control your variable costs. When you need, you can switch off, the tap very quickly. I don't see too many companies doing that actually. And I do encourage many founders to think about it like that. So you focus on strong growth, but you also focus on at least contribution margin or unit economic profitability, because truly speaking, that's the only real way to build a business. Eventually you have to get the company to profitability. So if you build it close to unit economic profitability while even being a high growth company, I think that could be a better model that many more companies from the tech ecosystem can adopt going forward.
All right. So stay prudent and focus on profitability. Rajan, coming back to you, we've seen a lot of exits. Exits make a market attractive for risk investors. Is the latest boom in funding also due to a lot of unicorns realistically looking to go public? And will investors also see exits from IPOs more than M&As, which has been the trajectory so far? Your view on this?
Sorry, Shruti, what's the question? I missed that.
No problem. I'll just repeat myself. So basically, we've seen a lot of exits, Rajan, and that definitely exists, make a market attractive for risk investors. Do you feel that the latest boom in funding is also due to a lot of unicorns realistically looking to go public? And will investors see exits from IPOs more than M&As now, which has been the trajectory so far?
Yeah, I think Shruti, the Indian startup ecosystem has had very few exits. Until 2021, right? We've had virtually very few, like you can count on one hand the number of companies that have gone public in the last tech startups that have gone public in India, right? So Make My Trip, India, and a few others, right? So until 2021, there were virtually no IPOs. And then if you look at large strategic exits, really, there weren't that many. There was Flipkart, Walmart, and sort of the list ends there. And then there were much smaller ones, right? And we do believe, Shruti, that Indian startup ecosystem, most exits will be in the IPO route for some time to come, right? And the reason is because, Google, Facebook, Amazon, etc., haven't really become as acquisitive here. And we still don't have as many companies like Byju's, right? So if you look at India's most active acquirer today, within the startup sort of decacorns and unicorns, it's really Byju's, right? Byju's has become very, very active. But I think, let's say 5 or 10 years from now, when we have many dozen decacorns, and then, you start having companies that are valued at 50 billion, 100 billion, 200 billion, those companies then tend to have the currency, right? The equity currency to go out and make sizable acquisitions. So at least our view is that for the next 5, possibly even 10 years, IPOs will really be the way in which most Indian startups will see large exits. I don't mean the 50, 100, $200 million type acquisitions. I think we'll see a large number of those. But companies being bought for $1, $2, $3 billion, we think that's a few years away.
Okay. Upasana, do you agree with Rajan on this? And will we see more of an IPO-centric market in India? For instance, in China, you don't see as much M&A compared to the US. You see a lot more IPOs, and it's a function of a rapidly scaling ecosystem. So do you agree with Rajan here?
Well, actually, I'm not sure. I don't think I may agree with him. But one thing he is right on is that we've not had exits period. M&A or IPO, tech sector in India has not had too many exits. And, while we are calling it the year of the IPOs, I can count the 4 tech IPOs on my fingers. It's Zomato, Nykaa, Policy Bazaar, and Paytm. And we all know the names, right? And while that's a great number, just contrast them with the number of startups in the ecosystem. So as a percentage, it will still be a very, very small number. And while I would like most Indian startups to go the IPO route and IPO in India, I think that the number of companies that will be able to meet the benchmark in terms of disciplined action, moving towards a clear financial performance, independent board. I think that maybe in the next few years, we will see many more companies working in that direction. So while right now there is a huge flurry because of, the cycle, the upward cycle in the capital markets, I do believe that this can become a good exit path, but I think we will need companies to mature and get to that level of, disciplined process, financial discipline and all of that before we can see, like dozens and dozens of IPOs every single year from the tech space.
All right. Rajan, let me, shift focus to Surge now. What are the kind of conversations you're having with startups as they aim to scale? If you could take us through the trends that you can predict for the next couple of years.
Yeah, I mean, look, I think Surge is Sequoia's, early stage platform, right, where we invest capital, and then we also have a sort of think of it as a founders academy where we work with, the absolute best early stage founders in our region, India and Southeast Asia, to help them accelerate their journeys, right? I think the discussions we have with our Surge founders are always about going back to the basics. Build an awesome team, right? Focus on real customer problems. Build awesome products. Get to product market fit. And then once you get to product market fit, you've got to scale prudently, but blitz scale sort of prudently. I mean, that's sort of the we what we've tried to do in Surge. Shruti is, bring, Sequoia was founded 50 years ago. Sequoia, has been in India for about 16 years. So what we've tried to do is bring our institutional knowledge over 50 years of working with, some of the world's most admired companies to very early stage founders to actually help them understand what it takes to do the right things early in their journey so that they can actually end up building enduring companies 10, 15, 20 years from now. So that's sort of what Surge is now. In terms of trends that we're seeing, I'd say building for the world from day zero is sort of probably the single biggest theme in India's startup ecosystem, right? So companies like Freshworks, Druva, Icertis, and many, many more, right? So we had like no SaaS unicorns 3 years ago. Today we have, I think, 13 or 14 SaaS unicorns, companies like Innovation and so on and so forth. They start in India, they target the world, and then they build for the world. SaaS, dev tools, and within that we have, large number of themes now, right? So you have enterprise SaaS focused on the US, you have SME SaaS focused on the US, you have dev tools, companies like Postman, companies like BrowserStack, and then you have basically regional SaaS, right? Indian SME SaaS, companies like KhataBook, companies like PagaBook, companies like Bikai, that are basically building software for Indians. So I'd say this whole SaaS and dev tools is a massive trend, right? So if you look at our last Surge cohort, Shruti, 40% of our cohort is SaaS and dev tools companies. They're building for the world from day zero, right? So that's one big theme. Outside of that, I would say there's innovation everywhere, right? There's no single trend, right? Let's take agri-tech. Sequoia we made our first investment in an agri-tech company about exactly almost 2 years ago, right? It was in our second cohort of Surge. We had a company called BChat, but now we have 6 or 7 investments, including in our last cohort, we had a company called Absolute. So whether it's agri-tech, ed-tech, where a space where you already have 5 or 6 unicorns, Byju's, Unacademy, and so on and so forth. We are seeing sort of the next generation of innovators that are either building for, consumers outside the first 50 million, edtech solutions, or they're building edtech for the world. A company like Kite that we've seen, in one of our cohorts that's now focused on edtech, edtech for the world. So across segments, so one is sort of building from India to the world, and then the other one is really, in every single sector, from e-commerce to digital health to edtech to agri-tech, we are seeing innovation. And then finally, look, this year, it's interesting that Upasana, there were only 4 tech IPOs. When you think about startups, right, it's tech and tech enabled. So one of the single biggest themes we're seeing now is direct to consumer brands. Companies like Mama Earth, companies like Wow, and in Surge, we have companies like Minimalist, companies like Bellora, right, that are actually, building new consumer brands, leveraging digital to build these very, very interesting companies, right? The fastest 0 to 100 crore revenue company in India is not a tech company. It's a direct consumer brand. And the amazing thing, Shruti, it's wildly profitable. Wildly, like think 30% PAT, while you're growing that fast. And these things you never saw in India before, right? And you see it because you have a large e-commerce market and so on and so forth. And the last thing I'd say is, look, I think over the next several years, we've already started seeing some very interesting Web3 startups, right? I know in Parliament today, there was a big discussion on crypto, right? So cryptocurrency is just one small part. Web3 is very, very important, right? So whether it's NFT, whether it's gaming, whether it's DeFi or Web4, what we call Web3 infrastructure, I think that's another big theme that we're seeing. In fact, in the second half of this year, right, 2021, Sequoia Capital India, we've made 19 investments, 19, Shruti, in Web3 startups. So Web3 is beginning to happen, and I think India has a
Sorry to say it, but I would like to know from you, we're talking about Web3. What are the sub-segments that you feel will have a huge potential?
Yeah, it's basically NFT, gaming, DeFi, and what we call Web3 infrastructure, right? So those are really the four sub-segments now, but they will grow over a period of time. You know, the fastest 0 to 1 billion GMV company on the history of the planet was an NFT gaming company from Asia. You know, I can't tell you which one it is, but I mean, it's incredible. 7 months. I mean, ask Upasana, you know, like you talk to anybody in e-com. I mean, you don't see that, right? 0 to 1 billion GMV, 7 months. Right. I mean, when I say GME, I mean consumer paid, and obviously these guys make a take on that, right? So gaming, NFT, you know, DeFi is really going to radically change finance, right? In very, very interesting ways. The kind of innovation that we're seeing in DeFi, distributed finance, is extraordinary, Shruti, right? So, and by the way, India, I think, has a unique opportunity to really win Web3 globally. But we have to get our regulatory and legal frameworks in place, right? So I was delighted to see that today our Honorable Finance Minister said that India will not ban crypto. We will come up with a framework, regulatory framework, and we should. Because what's happening in the interim, Shruti, is lots and lots of entrepreneurs from India, from China, from Korea, from Japan, from Australia, from the US, from Paris, from London. Guess where they're moving to? Singapore. You know why? Because Singapore has a regulatory and legal framework for Web3. It's very clear what you can do, what you can't do. And I mean, we are shocked to see how many world-class Web3 entrepreneurs are getting on planes and going to Singapore.
Yes, absolutely. True, Rajan. And on that optimistic note, you know, we're running a little out of time. Upasana, let me quickly come to you and shift focus to one big story that's taken the fintech ecosystem by storm. You know, the RBI recently proposed guidelines to regulate digital lending in India. It's advocating that all short-term products should get categorized as short-term consumer credit and follow the rules accordingly. Upasana, products like buy now, pay later are likely to get impacted as they will go through a longer customer onboarding process as applicable for a typical financial product. Do you think the guidelines will pause the buy now, pay later boom?
So I think, see, first thing is that India is a deeply credit-starved market. And if internet economy in India is going to boom, then credit's got to happen. And if credit's got to happen, then digital credit is going to happen. And I think what that means is that some layers of regulatory frameworks, you know, will come through for digital lending, all constructs of it, whether it is a personal loan or buy now, pay later or what have you. And I think to that extent, I think RBI is just looking out for the consumer's interest, because India has a very large population of banked customers who do not have access to credit. And so the consumer awareness levels are generally very poor in terms of policy. And what happens is that, like any other sector, you know, there are many good fintech companies that are really trying to make an impact, and they are bringing about financial inclusion in the country.
Yes.
But there will be some bad apples, and they are exploiting the user's ignorance, so to speak. So guidelines, regulations, whatever comes through, I think that all credible players in the market will very readily adopt them, because they wouldn't have a problem, you know, working with the law of the land. And in that, I think if there are some bad apples that get sifted out, I mean, so be it. I think from a buy now, pay later perspective, of course, Mobikwik as a company has been focusing on it, you know, very firmly for the last 3-4 years. And what I can tell you, just like Mobikwik, there are quite a few fintech companies who have been building the buy now, pay later product, where it is only offered to customers who do a full KYC. The onboarding journey is almost as if you are getting a credit card or a personal loan. So my point is that the legit players have already built kosher products, and they will have no challenges in adhering with any guidelines that will come about. While there will be some players, you know, who will have to, you know, clean up their act.
Absolutely, Upasana. And you spoke about bad apples. The RBI report finds 600 out of 1,100 lending apps illegal in India. And, you know, RBI has made several recommendations like setting up of a self-regulatory organization or a separate legislation to prevent illegal digital lending activities. But what more needs to be done to create a cyber-secure environment?
So see, Mobikwik is a member of the Digital Lenders Association of India, and we are together, all of the members, these are all legitimate, decent size, small and large fintech companies. We are studying the guidelines or the working paper that has come through, and we will be working with the regulator in framing whether it is the self-regulating organization or the right recommendations, which we believe will sort of assuage the challenges that we have seen so far in the market. I don't look at this like a bump in the road. I know you mentioned quite a large number, but I can tell you that, it's a 80-20 rule. 80% of the people are following whatever they believe are the right, rules to be followed. And given that there are no rules defined, there is difference of opinion. But of course, as we go forward, newer sectors of fintech are coming through, and the regulator in India is very, very proactive. So I think they will make it easier and easier for companies to get very good clarity on what is the right way to build a large scale business. See, we have seen RBI being very supportive in the last 12 years. We have a prepaid wallet license, we have a Bharat bill payment license, and some more applications with the Reserve Bank. I have only seen them very, very supportive and proactive in helping fintech companies, because ultimately I think financial inclusion in India, I think, has got a lot to do with how fintech companies are going to help build it out.
Absolutely. Before I wrap up this conversation, Rajan, let me quickly come to you. Tell us, what are the sectors, emerging areas that are likely to gain traction over the next few years? India's SaaS startups, like we discussed, have broken through. Similarly, what are the areas are bound to receive significant attention from marquee investment firms like Sequoia Capital India?
Yeah, as I said, Shruti, I mean, in India, there's opportunity everywhere. Right? This is what a lot of folks don't understand, is it's no longer about e-commerce only or fintech only or mobility only or, SaaS only or dev tools only, right? I mean, there is innovation everywhere, okay? I mean, over the next 5 years, we're going to see a dozen unicorns in ag tech. We're probably going to see at least a dozen unicorns in digital health. We're going to see, 2 or 3 dozen unicorns in edtech. I mean, I think in fintech, we're going to have 50, 100 unicorns, right? We're going to see several decacorns. So, so I think it's not, I think this question about what are the sectors which are going to be more prominent, Shruti, I think we are beyond that stage now, right? We have 1.3 billion people in India that Indian entrepreneurs are innovating for. But actually now Indian entrepreneurs are innovating for 8 billion people around the world, right? I mean, the world is our oyster. And what we're seeing now is extraordinary. I mean, from trying to disrupt the electric vehicle battery industry to, change the aquaculture industry. I mean, it is all over the place, which is absolutely fantastic.
All right. On that optimistic note, and thank you so much, Rajan, and thank you, Upasana, for giving us time. It was lovely speaking to the both of you. We had such an engaging session. Many thanks for joining us today. And stay tuned to Hindustan Times Leadership Summit. Up next is a session with Sonu Shivdasani on the road ahead for the hospitality sector. Stay tuned. It's a wrap for now.